Okay, quickly, we are going to be going over the idea of a strong or weak level and what this means and why it is so important for you to understand it. We're going over the conceptual ideas and defining everything, and then live trading after it to show you what it looks like in real time, right? So let's quickly get into the definitions of all of these ideas so you get a better idea of what market structure means and how to define a strong or weak level. First thing we're going to do is far left over here, right? What does it mean to be a strong high? Well, simply put, it is a high that produces new lows. Strong low, low that produces enough buying pressure for new highs. Weak high, high does not produce new lows. Weak low, low did not have enough buying pressure for new highs. Simple enough, right? Now let's go into some of the core ideas of market structure breaks and just some things to keep in mind as we move to the next section. A low or high, vice versa, low or high can only be identified as strong after seeing whether that level is able to break, right, that strong level. So we'll show you this in the next example. And a market structure break is the most important thing because it only occurs when a strong or low level occurs. So when a weak level is broken, it is not a market structure shift. When a strong level is broken, it is flipping the entire bias of the trend. Trade opportunities happen on high time frames and point of interest, and this is normally where a reversal point will occur. So if you have a high time frame fair value gap, trendline liquidity, buy side, sell side liquidity, whatever it may be, on high time frames, that point of interest gets hit. Good probability that a strong level may be broken in the near future and a bias shift will occur. Next thing, take a screenshot in the beginning, by the way, if you need this. This is the conceptual idea of what it looks like on the chart, right? Typical order flow, very bearish, strong highs, weak lows. Highs continually to break the lows. You trade into a high time frame point of interest, maybe a high time frame fair value gap, and then you get price trading to the highs. You break the strong high, and this is the critical point, right? This is the market structure shift. Now you're going to produce lower or higher lows, right? Higher lows continually. You're going to find entry after that low breaks a strong high because you'll get a pretty strong reaction, and typically a fair value gap or some type of imbalance will be before that structure was broken, and then you just target the next highs. Okay, let's go into the live example real quick of Rune because this one is so damn clean. We've taken many trades on this in the previous month. As you can see from this image I'm pulling up on the screen, it looks almost identical, right? Right, it looks almost identical. You have all these strong levels. You have a bunch of these strong highs, not breaking, price not trading into them, staying protected, and then you have all these lows, break, 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 as you can see. Absolutely full bearish trend, but now you have plenty of levels marked out for you to trade into. One thing also to note as we move to the 1 day, we're going to mark the one key point of imbalance, right? This is the point of interest, is this daily fair value gap. And we're going to move back down to the 8-hour and show you guys exactly how you can take advantage of this, understanding the market structure shift. So for now, no market structure shift. Typically, this order flow should continue price to the downside, but as we play this, we'll see that price breaks, right? As price breaks right here, there is something provided of interest, which is a imbalance before that level. And now we know that if price trades into this, we want to go long, targeting the next strong high, which is here, stops below this level. Play it out, and you trade into it. You collect your profit, and there you go. What's the next thing you need to do? Well, potentially, price is going to trade back into this imbalance, right? Or back into an imbalance that is formed. So what we did here, this is actually a trade that we ended up taking, was succession trade. Price has a good chance to trade back into this imbalance, and we want to target the next high, right? That's the goal here. Keep targeting the strong highs after market structure has shifted. Let's pull up this circle here to show you where on earth did market structure shift. You might not be able to tell, but it was actually right here. Tricked you? I might have, but this should be something you should be able to tell. Strong high, right? Continually broke new lows. this is the market structure shift. If you miss it, that's fine, because potentially you can also call this one your market structure shift. So either of these would have worked. One just would have given you an entry before the other, because this one, price traded back into a point of interest. What do? Long into the strong high. Clicked up 4R. Now again, as price trades here, we're looking for an imbalance to fill. So we can see imbalance fills, top side of it fills, and you take long into the next strong high. Do not worry about these highs here, right? Do not worry about these highs. These are irrelevant and will not produce any substantial movement in price. You need to target the strong highs, and there you go. Strong highs get tagged. I think price even moves above this a little bit more. There you go. TP gets absolutely tagged. Price rails to the new highs, and there you go. One interesting part here is if you get price this close to a strong high and it does not hit, you can almost be certain, like guarantee, that that high will hit in the near future. Your goal is only to find some type of imbalance to take entry and then take it back into that high. So whether it's here or you find it lower in the range, doesn't matter, right? You can even take buy side, or sorry, we have buy side liquidity, fair value gap, whatever imbalance you want to take. There you go. This can be it. So you would take one loss here, and you would take your better risk reward trade all the way to the highs, stops below the fair value gap, sell full on take profit, and there it is. Right? So you'd have your one loss here, fails to hold the imbalance, minus 1R, and then boom, plus 7R. So this is exactly how I would use market structure to tell me how to trade. It is literally giving you the entire roadmap. It's telling you when market shifts and now that you should be going long, when previously the whole order flow was bearish. It tells you when and what levels to sell at, and it gives you imbalances on the way up. Right? It gives you imbalances on the way up to the next level in order for you to take entry on. Right? So hope this made sense for you guys. Again, this is going to be your bread and butter. You can take a screenshot. Weak highs, you are going to target. Strong areas, you are going to enter. So remember this small part right here. Strong areas, we enter on. Weak areas, we look to target. So we would like to, we'll go over this one last time before we end the video. What we would like to do is enter as close as possible, right? Enter as close as possible to the strong levels and sell fully on the previous bias structure strong levels, because you'll get an immediate reaction to the downside for those. All right. So that's how we used Rune. We did a lot of these in real time. I'm actually going to pull up the screenshots for all these right now to quickly show you that we did in fact take a lot of these positions. Oh, we have it right here. We have it in the trade log. Where is Rune at? Here we go. Boom. Rune. Full TP. This was January 30th. We took a Rune again. Where is it? February 9th. Boom. Clicked 8.5R. So we did all of these in real time just to show you that this is absolutely coherent and sound trading model, and especially something that I think a lot of you should be using if you aren't already in your current trading model. So fantastic success with this. Hope I cleared this up for somebody that had issues with it, but nonetheless, hope you become 1% better today, 1% better today, hopefully. So there it is. Strong and high levels defined, and what it means when a market structure breaks, and how to take advantage of the bias flip of the trend. There you go.